Yes, today we are going to see the concept of gross profit margin and gross profit markup. Now, before we go to see the concept of gross profit margin and gross profit market, we are going to see a simple example. Cost price $200. I bought a product for $200. Selling price, I'm going to sell it for $600. So what is the profit? The profit $400. So cost price $200. I bought it for $200 and I'm going to sell it for $600. So I make a profit of $400. So there are two ways to see the concept of profit. I mean in terms of percentage. We can see some people can ask a question, what is the percentage profit on sales? Percentage profit on sales is equal to profit over sales times 100 as a percentage. So what is the profit? 400. What is sales? 600 times, this will give us 67% approximately. So another person can ask me a question, what is the percentage profit on cost? Percentage profit on cost over cost times 100. What is the profit? 400 cost 200 times, this will give us 200%. So the same thing is being viewed differently. Percentage profit on sales. In accounting term, we won't say percentage profit on sales, we will say gross profit margin. And in accounting term, we won't say percentage profit on cost, we will say gross profit markup. Gross profit markup. So there are two ways to calculate profit in terms of percentage. We can calculate it in terms of percentage of sales, what we call gross profit margin, or we can calculate it in terms of gross profit, in terms of cost of sales, what we call gross profit markup. These two techniques, they are measuring the percentage profit. One is measuring the percentage profit in terms of sales, what we call in accounting term gross profit margin, and the other one is again measuring the percentage profit, but this time in terms of cost, what we call gross profit markup. So very easy, dear student. If you want to remember margin, margin means selling price. If you want to remember markup, markup means cost price. So margin will go with selling price, markup will go with cost price. So whenever you are going to calculate gross profit in terms of percentage of sales, we call it gross profit margin. If you are going to calculate gross profit as a percentage of cost, we call it gross profit markup. Now, let's see a question how to calculate profit. We have sales revenue $60,000. Gross profit margin 25%, and we are going to calculate gross profit. Calculate gross profit. So how do we calculate gross profit? Gross profit margin is equal to 25 over 100 times sales revenue. What is sales revenue? 60,000. This will give us $15,000. This is gross profit. We are using gross profit margin to calculate gross profit. Gross profit margin 25% means gross profit is equal to 25 over 100 times sales revenue, because margin, it will go with sales revenue. Now let's just calculate using gross profit markup now. Cost of sales $40,000, markup 25%. We are going to calculate gross profit. Calculate gross profit. So gross profit markup is equal to gross profit markup is equal to 25 over 100 times cost of sales. Because markup, it will go with cost of sales time cost of sales. How much? 40,000. This will give us $10,000. Okay, no? This will give us $10,000 gross profit. So we have used the concept of gross profit margin to calculate gross profit, and we have used the concept of gross profit markup to calculate gross profit. Now we know that if we are given sales revenue, it will have to go with margin. If we are given cost of sales, it will have to go with markup. Then we will be able to calculate gross profit. But in some cases, we are given sales revenue, but this time we are given markup. So in this case, we cannot calculate gross profit because sales revenue, it will go with margin. So in this case, what we have to do, we have to convert the markup into margin. Convert markup into margin. We have to convert markup into margin. Markup means cost price and margin means selling price. So how we are going to convert markup into margin? Markups cost price, and we are going to convert it into selling price. So we have to add cost price. We are going to convert it into selling price. We will have to add because selling price is greater than cost price. So whenever we are going to convert markup into margin, we will have to add. Now what we have to add? We have to add the denominator. For example, if we are given markup 25%, we have to convert this one into margin. Markup 25% means 25 over 100. And this one we have to convert it into margin. It will become, we have to add the denominator. We have to take the numerator, we have to add it with the denominator. So, and now we can multiply it by sales revenue. Now we can multiply it by sales revenue to calculate gross profit. So, dear student, remember markup means cost price, margin means selling price. In case we are going to convert markup into margin, we will have to add the denominator. We will take the numerator, we will add it with the denominator to get the to convert markup into margin. Now let us see a question. Sales revenue $60,000. Markup 20%. And we are required to calculate gross profit. How do we calculate gross profit? Markup, it does not go with sales revenue. So we have to convert the markup, convert markup into margin. Markup means cost price, margin means selling price. So in this case, we have to add cost price into selling price. We have to add cost price with to convert it into selling price. So in this case, we have markup combien 20/100, and then we convert it into margin. This will give us margin will be 20/120. So now we can calculate gross profit. Gross profit is equal to 20/100 times 60,000. So this will give us 10,000. In this case, we can calculate gross profit because we have already converted the markup into margin. Now, let us see cost of sales. $80,000, and we are given margin 25%. So in this case, we have to convert, let's say 20%. We have to convert because margin, it does not go with cost of sales. We are required to calculate gross profit. So in this case, we have to convert the margin into markup. Margin to be converted into markup. So margin means selling price, markup means cost price. Selling price is being converted to cost price. We have to less the denominator. So in this case, margin is equal to 20/100. We have to convert it into markup. This will give us 20 markup 20/80. We have to less the. Now we can calculate gross profit. Gross profit is equal to 20/80 times $80,000. So this will give us $20,000. Here we are so far concerning conversion of markup into margin, margin into markup, and so on. Now, so far what we have learned concerning gross profit margin and gross profit markup. Gross profit margin, gross profit margin is a percentage of sales revenue. Markup is a percentage of cost of sales. Okay. Now, gross profit margin is gross profit expressed as a percentage of sales. Gross profit markup is gross profit expressed as a percentage of cost of sales. In case we are given sales revenue, it has to be in line with margin. So in this case, we can calculate gross profit. If we are given cost of sales, it should be in line with markup. So we can calculate gross profit. So margin it will go with sales revenue. Markup, it will go with cost of sales. Okay, no? So in case we are given margin, and we are given cost of sales. So in this case, we have to convert the margin into markup. Or if we are given markup and sales revenue, so we have to convert the markup into margin. So this is a very important concept when doing question on financial statement. So for concerning the topic incomplete records, at times we are given cost of sales. We have calculated cost of sales, opening inventory at purchases, less closing inventory, and we are given cost of sales, but in the question we are given margin. So in this case, we have to convert the margin into markup in order to calculate gross profit. One gross profit has been calculated, then we add it with cost of sales, we will get the sales revenue. Then we can complete the question on income statement. Thank you very much for your attention.